Let's talk about some ways to protect yourself when you're doing private money lending. So, a lot of this will depend on the type of loan that you are giving. Um, I usually suggest just lending to businesses. It can get really complicated when you're lending to an individual because usury laws come into place. And I mean, the less laws I have to deal with, the better. But usury laws basically say the max amount of interest that you can charge to an individual for a loan. And they vary from state to state. And there's often carve outs for businesses or for business purposes or for investment purposes. So I tend to stay away from lending to individuals. It's also harder to protect yourself, in my opinion, when you're lending to an individual as opposed to lending to a business. Um, so the ways that I protect myself when lending to businesses is one, by keeping my niche area. So not being so open to expanding into all types of loans. I typically only lend to fix and flippers or to contractors who work on insurance claims, for instance. Um, there's been a lot of opportunities to do different kinds of loans. I've had someone approach me about a business loan. I've had people approach me about car loans, and that's just not my area. I don't want to deal with the Uniform Commercial Code, so the UCC, and having to place a lien on someone's non-real estate property. I don't want to deal with it. I think the easiest, cleanest way for me is being able to protect myself by placing a lien on the actual real estate. But another way that I protect myself is with personal guarantees. So this is an interesting way to protect yourself because you can have a personal guarantee, but if that person is insolvent, and they don't have any money, then you can't really collect on any debts that they owe you. So part of your work and making sure that you're protecting yourself if you're using a personal guarantee is having them pledge certain assets. If they own a home personally, having that in your documentation, in your personal guarantee documentation, that this is an asset that can be leveraged in the event that they default on the loan. They may have other things, cars, jewelry, Birkin bags, I don't know. But all those things can be pledged as assets in a personal guarantee that can help you recover if they default. So other than placing a lien on the property, you can ask for a personal guarantee. You can also get a lender's title policy. So this is a policy that protects you if there's issues with the loan or issues with the title of the property, and for whatever reason you're unable to collect based on title issues, that's something that can protect you. Another way is just like, I don't know, trusting your gut. And I know it sounds like foo-foo-y, but sometimes like it just doesn't feel right. And maybe it's not right, like maybe this is not the best transaction for you. And so one technique that I use to determine if this is something I want to move forward with, if I'm having like an icky feeling, is I come up with a bunch of questions to ask. So I'll start saying like, what is your plan for this? Or, how do you handle this? Or what do you do in this situation? Like the more questions I ask, the more comfortable I can get with something, or the quicker I can make a decision. So that is a strategy that I use a lot to protect myself. Another thing, so this is like not, people aren't super clear on the best way, like in terms of monthly payments versus a balloon payment at the end. I use balloon payments, or at the end of the loan you pay back the full amount plus interest. Other people like to do monthly payments because they feel that it protects them more. So it's almost like at least you're collecting something throughout the life of the loan, as opposed to just having your money out there floating around. That is, I think, a way that you can protect yourself. The reason that I don't do that is because I want private lending to be as passive as possible for me, right? So I don't want to have to follow up with my borrowers every month to make sure they're paying. I don't want to have to come after them if they miss a payment. I don't want to have to deal with any of that. I don't want to be like servicing a loan. So for me, I just wait till the end, and I charge a flat fee. And like I said before, I only lend to businesses. There's often a carve out for businesses and investment purposes when it comes to usury. So those are some of the ways that I protect myself in private lending. I'm sure there's a ton more, and make sure you do your research. There's not a ton of stuff out there. There's definitely associations, they have courses. I've seen some Facebook groups and stuff, and you can definitely network with other lenders, but a lot of it is going to be trial and error. So, make sure your documentation's good, get notarized what you need to get notarized, place the liens you need to place, and do your due diligence, on the person, on the transaction, on the business. But those are some of the best ways to protect yourself when you're private lending.